Hi, today we are going to have a look at 2016 Leaving Cert Ordinary Level Question 1. As with all question 1s, we're given a trial balance and some notes, and we have to do a trading profit and loss account and a balance sheet. Question 1 at ordinary level, sometimes you can be asked to find the accounts of a company, sometimes of a manufacturing company, also of a sole trader and a departmental account. So this question here is just the final accounts of a company. So as I said, we're given a trial balance which balances. So if we put all these figures from the trial balance into the accounts, our accounts would balance. Now, additional to the trial balance, we have some notes here. These notes also have to go into the accounts. As the trial balance balances originally, if we put all of these figures from the trial balance into the accounts once, our accounts will balance. The notes have to go in twice because each note has to go in as a debit and a credit. So that these notes have to go into the accounts twice. So the rule of thumb is the figures from the trial balance should go into the accounts once, and each of the notes should go into the accounts in two places. So before we start with the accounts, with the trading profit and loss account and balance sheet, first of all, we're going to have a look through the notes. Note 1 says stock of goods for resale on the 31st of the 12th was 45,300. That just means that closing stock is 45,300. And we know it's closing stock because it's at the end of the year. So our closing stock here is going to be 45,300, and the closing stock is going to go in cost of sales in the P&L, and the second place closing stock goes, it's a current asset in the balance sheet. The second note is about stock of stationery, which is €700. So stationery is €700. So that's going to go in as an admin expense. We have a little note on stationery usually. Usually with stationery, we have opening stock of stationery plus stationery, and then we take away closing stock, and that gives us our stationery figure. So we'll do that in admin expenses in the P&L. And it's also a current asset in the balance sheet. It's good at the end of the year. We can sell it to make money. So it's an asset in the balance sheet. Third note is to do with depreciation. So depreciation, this reduces the value of the assets. Okay, so the first one is buildings is 2% of cost. So we just go to the cost of buildings here in the accounts, which are 720,000, and we get 2% of that. So it's going to be 720,000 by 2% is 14,400. And that is an admin expense in the P&L, is one place it's going to go. And it's also going to go in the fixed asset note of the balance sheet. Okay, we have to add it to the accumulated depreciation. That's this year's depreciation. So we need to add that to the accumulated depreciation in the balance sheet. The next depreciation we have is office equipment. And that's 10% of the book value, not of the cost. So the book value is how much it's actually worth now. So to get the book value, so office equipment is 10% of the book value. So to get the book value, we get the office equipment of 75, and we take away how much it's been depreciated so far is 22,000. So at the moment it's worth 75, it was bought for 75, depreciated by 22, so it's worth 75 minus 22. So this is going to be 75,000 minus 22,000. And then we get 10% of it, which works out to be 5,300. Our next note is on rent receivable due. So rent receivable is actually, it's income, okay? So sometimes rent could be an expense if you're paying out rent. This is rent receivable due to us. So it's income that we're owed, rent that we're owed. So at the end of the year, there was rent owed of 2,000. So we're going to do a note on rent here. So if we just look at the trial balance, we can see that so far, if I see rent receivable, if I look down through my trial balance, I just see rent receivable somewhere, and here it is, rent. And it's actually kind of tricky because if it's on the right-hand side for trial balance, it's income, and if it's on the left-hand side, it's expense. So with a trial balance, on the left-hand side or the debit side, we have assets, and liabilities will be on the credit side, and then expenses will be on the debit side and income on the credit side. So this rent here, I know it's rental income because it's on the credit side and it's 12,000. So far, for the trial balance, rent is 12,000, and then we're actually due another 2,000. It says in the note 4 that we're due another 2,000 of rent. So rent now comes to 14,000. So the 2,000 that I'm still owed is a current asset in the balance sheet. It's good. I'm owed 2,000. I'm going to get that 2,000. And then the total amount of the income for the year, the 12, which I got, and 2, which I'm owed, is the 14,000. That total amount will go as operating income in the P&L. Note 5 is to do with advertising. So advertising was for the year ended 31st of the 3rd, 2016. So we're doing the accounts up to the end of 2015. And we paid advertising up to the year end 31st of the 3rd, 2016. So all the advertising that we paid, 3 months are for next year. So we've prepaid some advertising because we've paid some of next year's advertising, so we've prepaid it. So if I look at my advertising, is 18,000 in the trial balance. So my note here, the advertising in the trial balance is 18,000. For 3 months of that is for next year. So to work out the amount that's for next year, if I get my 18,000, if I divide that by 12, because it's 12 months in the year, and 3 of those are for next year, that is going to be 4,500 of that rent, of the advertising is for next year. So if I take them away, the advertising for this year is 13,500, and that's going to be my selling and distribution expense in the P&L, this year's amount. The amount that I've prepaid for next year is an asset because I've effectively overpaid advertising, which is good. I don't have to pay it again next year. So that is a current asset in the balance sheet. Note 6 says provision for bad debts should be adjusted to 5% of debtors. So at the moment, if I go up and look at my bad debt provision here, so my bad debt provision should be here in the trial balance. So my provision for bad debts is 4,800. That's what it is at the moment. And we're now saying that it should be 5% of debtors. So I'm going to have to adjust it. So at the moment, the bad debt provision is 4,800. It should be 5% of debtors. So I look at my debtors, which are 62,000. Okay. So my debtors are 62,000 and the provision should be 5% of that. So per the trial balance, so first of all, I'm going to put up what it is from the trial balance. So the bad debt provision for bad debts from the trial balance is 4,800. That's from the trial balance. It should be 5% of debtors. So if my debtors are 62,000 and the provision is 5%, I got 5% of 62,000, which is 3,100. Now, we just need to be careful here because sometimes we have to increase our bad debt provision, which is bad. Okay, we're kind of estimating that we are going to have more bad debts than the previous year. And sometimes we have to decrease our bad debt provision, which is good. So we just have to be careful when we're working this out. So at the moment, our bad debt provision is 4,800. So we're estimating we're not going to get 4,800 from our debtors. Now we think it should be 3,100. So it's actually decreasing, which is good. And it's decreasing by the difference, which is 1,700. And because the bad debt provision is decreasing, it goes as operating income in the P&L. If it was an increase in bad debt provision, that would be bad, and that would go as a selling and distribution expense in the P&L because it would be bad. But in this case, it's good, so it goes in operating income in the P&L. Note 7, provide for the debenture interest due. So the debentures, again, are long-term loans. To work out our debentures, well, we've a debenture loan of 80,000. The interest rate is 8%, and we got it on the 1st of the 4th. So we had it for 9 months. So to work it out, it should be 80,000 by 8%, and then multiply by 9 over 12 because we had it for 9 months. Now that's what it should be for the year. How much did we actually pay? If I look at the debenture interest of 1,200, and then I'll be able to see what's due. So my debenture interest for the year, my debenture is 80,000. The rate of interest is 8%. And I'm going to multiply that by 9 over 12 because I had the debenture for 9 months. So I should have paid 4,800. How much did I pay in the profit and loss? the trial balance 1,200. So how much have I still left to pay? 3,600. So the full amount for the year, the full amount of interest I should have paid for the year, the 4,800, that's what's going to go in the bottom of my profit and loss account. The amount that I still have to pay, 3,600, is going to go as creditors less than 1 year in the balance sheet, because I'm going to have to pay that amount that's still due in interest in the next year. So that's going to go as a creditor less than 1 year in the balance sheet. And finally, the last note is corporation tax is 15,000. So corporation tax is 15,000. So at the end of the year, I'm going to have to pay corporation tax of 15,000. So I'm going to take that away from my profit at the bottom of the profit and loss account. That's one place it's going to go. And again, that hasn't been paid yet. They're saying corporation tax is 15,000, but it hasn't been paid. So that is going to go as creditors less than 1 year in the balance sheet because it hasn't been paid. So that's our notes finished. Now we have to do the accounts. So first of all, we're going to start off with our trading profit and loss account. So at the top of the trading profit and loss account, the first thing we're always going to have are sales less sales returns. So from the trial balance, and again, when we're doing the accounts, if there's been adjustments from the notes, they're the figures we use, the most updated figures. And if there's been no adjustment to the figures, we just take it from the trial balance. So there hasn't been any change to sales or sales returns, so they're coming straight from the trial balance. So sales are 5,60900. So here, 5,60900 are sales. And then I'm just going to take away sales returns because they reduce our amount of sales. Sales returns, I can see from this question, are returns inwards, sales returns, 4,800. So if I take those away, it'll give me my total sales figure, which is 556,100. Now, my next heading is less cost of sales. So all of this here is going to work out my cost of sales. So to get my cost of sales, I'm going to start off with opening stock. And again, opening stock I will get from my trial balance. There's been no change to opening stock. So opening stock is a stock of goods for resale at the first of the first. That's why I know it's opening stock, 45,600. Now, I'm going to get my purchases. Less purchases returns is going to be the next thing I'm going to put in cost of sales. So in this question, purchases are 225,000. And I don't think there actually are any purchases returns here. Okay, there are no purchases returns, so I'm just going to leave that blank. Okay, if you didn't want to put it in at all, you don't have to, but I just put it in here and leave it blank just to show you that if there were purchases returns, they would go here. Carriage inwards also goes in cost of sales because that's the cost of bringing in goods if there are any. So again, if I'm going to check if there are carriage inwards. If there is, if there's not, we'll just leave it blank. So if I can look down through here, do I see anything about carriage inwards? No. So there's no carriage inwards. So that is also going to be blank. So now I'm just going to add these up here. And again, just with the carriage, sometimes the carriage inwards goes in cost of sales, and just carriage outwards, that's getting it out to customers, that actually goes in selling and distribution expense. So just be careful of that. So my cost of goods available for sale are 270,600. And as I could see from note 1 of the accounts, closing stock is 45,300. So you can see it from here, or if I look at my notes here, closing stock is 45,300, and that goes in cost of sales. So my cost of goods available for sale minus my closing stock gives me cost of sales of 225,300, and sales less cost of sales give me a gross profit of 330,800. So next we're going to add any other income that we have apart from sales here. So that's operating income. So the first thing we're going to have there is the decrease in the bad debt provision, which I can see from my notes here. We said there was a decrease in the bad debt provision, which is good. So the decrease in the bad debt provision is 1,700. That will go here. The rent we received, the total amount of rent for the year, not the amount that's due, the total amount of rent for the year And again, I can see that from my note here. There's a note on rent receivable. And I hear 14,000, that's operating income P&L, that will go there. And we can add the rent received due if we want. I think it's nearly better, so we could put the 12,000 here, maybe, and the 2,000 here, or we could just put the 14,000 together. Okay, so it doesn't really matter. I can put the 12 and the 2,000 there like that. So once it totals to 14, that's fine. So to add up these, they come to 15,700. So my additional rental income or total income is operating income is 15,700, and I could actually might just put that in the final column here, 15,700, and then I am going to total these. So my gross profit before adding the additional income was 330,800, and when I add the operating income, the other income, it comes to 346,500. So now I have to take away my expenses. There's two different types of expenses: administration expenses and selling and distribution expenses. Administration expenses are kind of like general expenses, whereas selling and distribution expenses are to do anything to do with sales, selling the product, or distributing it out to customers. So that's what goes here in selling and distribution. I suppose everything else kind of goes into administration. So my first note in administration is going to be about stationery. So you can see in this square here, we have to do like a little note on stationery itself. So to do that, we're going to start off the opening stock of stationery, which I can see here from the trial balance stationery, stock of stationery, the first 12,800. So I'm going to have opening stock of stationery, 12,000. Sorry, let's double check that. Opening stock of stationery, 1,200. So it's 1,200. Then I'm going to add the stationery that we bought for the year. So again, I can see here stationery is 6,300. So I'm going to add 6,300. And then I'm going to take away closing stock of stationery, which I looked at in my notes earlier. And again, it's in the notes at the bottom of the question, or I can take it from here. Closing stock of stationery is 700, and I said that went in admin expenses and P&L, so that goes here. So 7,500 minus the 700 leaves me with 6,800. Wages and salaries, there's no change to wages and salaries, so I'm just going to take that figure from the trial balance. Wages and salaries, 127,100. Light, heat and insurance, I don't think there's any change to that, so I'm going to take that from the trial balance. Light, heat and insurance, 24,000. Directors' fees, again, no change to that, so directors' fees straight from the trial balance, 35,300. Then depreciation of buildings, I worked out here in my notes. Okay, because that wasn't the notes, so I have to put in the most up-to-date figure. Depreciation of buildings, 14,400. And then depreciation of office equipment, again, I'm going to get from my notes, depreciation of office equipment is 5,300. So if I total up these, they will give me my total administration expenses comes to 212,900. Now the selling and distribution expense, okay, so selling and distribution expense. So I can see from my notes here that advertising was 18,000, and the advertising prepaid I'm going to take away 4,500. So again, I can put the 18,000 less the 4,500. If you want, you can just put in the 13,500. So I'm going to put in 18,000 minus 4,500. So advertising is 18,000 and less advertising prepaid 4,500, and that gives me 13,500. Now a rule of thumb as well, just to that will help you with when you're doing the balance sheet at the end of the year. So at the end of the year, and this is the balance sheet is always at the end of the year, you add things that's due and you take away things that's prepaid. So at the start of the year you do the opposite, but that doesn't concern us for the moment. So just remember, at the end of the year when you're doing the balance sheet, you always add things that are due and subtract things that are prepaid. So because the advertising was prepaid, I take it away. And above here, just the rent receivable was due. That's why I added that on. So now my total selling and distribution expenses come to 13,500. So now if I add my administration expenses and my selling and distribution expenses, they come to 226,400. So my operating profit is going to be 346,500. That was my profit so far. And now I'm going to subtract my expenses. So that gives me operating profit of 120,100. Now I have to take away my debenture interest because that's going to reduce my profit, the interest I pay in debentures. And again, if I go down to my notes here, I have a note on debenture interest. So it's the total amount for the year. So debenture interest for the year, that's what goes at the bottom of the P&L, as we can see here, 4,800. So I'm going to subtract that to get my net profit. And then I have to take away the corporation tax for the year. That's also going to reduce my profits. So again, corporation tax for the year is 15,000, and as we said, that goes in the bottom of the P&L. That's one of the places it goes. So it's here. So when I take that away, I am left with profit after tax of 100,300. Now I have profits coming forward at the start of the year. So see, profit and loss balance the first of 2015, 22,100. That's profit coming forward at the start of the year. If that was on the left-hand side, that would be a loss coming forward, but it's a profit coming forward of 22,100. So that is going to go here, 22,100, and then I'm going to add that on to my profit for this year, which gives me total profit and loss balance at the end of the year of 122,400. So that's my profit and loss finished. Now I just have to do my balance sheet. So to do my balance sheet, the first thing we're going to start off with are tangible fixed assets. So I'm going to put in the cost of buildings and the cost of office equipment, and I'm going to get them from the trial balance. So buildings are 720,000 and office equipment is 75,000. So they come to 795,000. Now the accumulated depreciation can be tricky. So to get accumulated depreciation, that means all the depreciation of all the years so far. So to do that, I have to get the figure from the trial balance and then add this year's depreciation. Okay, so if I look at my buildings, the depreciation of buildings from the trial balance is 86,000. It's going to be 86,000 plus this year's depreciation of buildings. So it'll be 86,000 plus this year's 14,400. So that's going to be 86,000 plus 14,400. So that comes to 100,400. We're going to do the same thing for office equipment. If I look at office equipment, depreciation of office equipment so far in the trial balance is 22,000. And I have to add this year's office equipment, 5,300. So it's going to be 22,000 plus 5,300. So that comes to 127,700. And the net book value is the cost minus the depreciation, because depreciation reduces the value of the asset. So again, office equipment cost 75, been depreciated by 27,300, so now it's worth 47,700. And again, I can subtract these, or I can add these two figures down. Both should give me 667,300. Now we're going to add my intangible assets. The only intangible asset I have are patents. Okay, these are assets that we can't physically see or touch, but a word value, like patents, which is kind of an idea you come up with. So patents are 160,000. So I'm going to add that in here. Now sometimes there are financial fixed assets or investments, but there aren't in this question, so I'm not going to have any of those. So I'm just going to add my tangible fixed assets and my intangible fixed assets to give me the total fixed assets of 827,300. So these are fixed assets. These are like assets that don't really change and are worth a lot of money. Then we have current assets. So these are assets that kind of change on a regular basis and they're still good assets. So the first one we're going to have our closing stock. Okay, so closing stock at the end of the year, 45,300. And again, that's a current asset in the balance sheet. Closing stock of stationery, again, we can see here 700, and that's a current asset in the balance sheet. Then I'm going to have debtors less my provision. Okay, so my debtors I can see from the trial balance, or I can have a look at it from the notes. I've done a note on this. So my debtors are they're 62,000, because remember we worked out 5% of debtors are 62,000. Or I can have a look here and I can see that my debtors are 62,000. So debtors are 62,000. And then I'm going to take away my bad debt provision. So if I look at my note here, my bad debt provision is, and it's a total amount, not the increase or decrease. The increase or decrease goes in the P&L. It's a total amount of the provision. What it should be, the total amount, 3,100, goes as a current asset. So my debtors are what people owe us. If I take away what I think they're not going to pay us, the bad debt provision, that comes to 58,900. I've done a note on advertising. So advertising prepaid is good. So I've overpaid advertising, which means I won't have to pay it next year. So that's good. And it's just the prepaid amount. It's a current asset in the balance sheet, 4,500. And I'm owed rent, which is good. I'm going to receive that in the next couple of months. So that's also a current asset. And it's just the amount that I'm still owed, the 2,000, is a current asset. So if I add all of those up, that will give me total current assets of 111,400. Now I have to take away the creditors' amounts falling due within 1 year, which used to be called current liabilities. These are amounts I owe within a year. So the first amount here are creditors. These are people we owe money to. There's been no change to creditors. So if I look at my creditors, the amount is 48,000. A bank overdraft. So again, I just need to be careful with bank. Bank can be an asset or a liability. So you see here, bank, if that was on the left-hand side, it'd be an asset, meaning it would be a current asset. It would go up above in current assets. But because bank is on the right-hand side, it's a liability or an overdraft. I actually owe money to the bank of 12,500. So that's why it goes here. It's an overdraft of 12,500. Corporation tax, again, we said, it was our last note, the corporation tax. It said the amount for the year is 15,000, but that hasn't been paid, so that's a creditor due within a year. VAT, there has been no change to VAT, so it's going to take that figure from the trial balance. VAT is obviously liability, is bad. We have to pay a VAT at the end of the year, 7,200. And I have to pay the debenture interest that I still owe. So if I go back to my note and debenture interest here, the amount that I still owe is a liability or bad. That's 3,600. That has to be paid. So if I add up all of the liabilities or creditors due within 1 year, it comes to 86,300. And then my assets, my current assets, are good. Take away my amounts that I owe in the year, which are bad, of 86,300. That gives me 25,100. And if I add that 25,100, because my assets are greater than my liabilities, which is good, so I'm going to add that to the 827,300 above to give me 852,400. And that's one of the totals of my balance sheet. That's total net assets. As I said, our balance sheets should balance. So when I do this bottom part, I should also get 852,400 here. The first thing, so this is the finance by section. The first thing that goes here are creditors due after 1 year. So this is money that we owe after 1 year, which are long-term loans or debentures. Debentures are just long-term loans, and they are 80,000, so they go here. Then the share capital, I've authorized and issued share capital. So the authorized is 1 million and the issued is 650,000. And it's only really the 650,000 that we use, but I have to disclose or show the 1 million. So I'm going to put the authorized is 1 million and the issued is 650,000. And we kind of put a double line underneath the authorized because we don't actually use that figure on calculations. Then I just get the profit or loss that's brought forward from the profit and loss account. So this is just always the final figure from our profit and loss account, which is 122,400. So now I just simply add these to give me 772,400, and then I'm going to add the 80,000 to the 772,400, which gives me 852,400, and that's my capital employed. So now I can see that my balance sheet balances. So when that happens, you should have a fair idea that the question is right. So hopefully that helps you with the ordinary level question ones. If you want to see any more videos, just like and subscribe to the YouTube channel. Thank you.